Good morning. Welcome to your daily solo 401k webinar Q&A session with my solo 401k financial, where we help you stop overpaying taxes and start building real retirement wealth. Today's topic is too late for a solo 401k? Nope. Here's the deadline rule. So this is your chance to get answers. Use the chat to ask questions on today's topic or anything else surrounding solo 401ks and even self-directed IRAs. Type them over now so that we can be sure to get to them all. Let's get started. Looks like we already have some questions here in the queue. I had you guys help me open an account at Fidelity a few years back with the checkbook control. I like to get accounts at Interactive Brokers. Can you guys assist with opening those accounts? Certainly. Go ahead and use this password right here, next23, after you click on this link right here, and that'll prompt us to help you open up brokerage accounts at Interactive Brokers. Here at my solo 401k financial, we're very popular in the industry because you get to choose where to hold your funds. It's your money, therefore, you can choose to hold your funds for the plan at your local bank, Interactive Brokers, Fidelity, Schwab, Altruist, Merrill Lynch, Raymond James, really any brokerage firm that you want to use. Because again, you get to choose where to hold your funds. We take care of being the plan document provider and we assist with the ongoing compliance support. So great question. Take a look at that. So click on that link. Enter that password there, and that'll prompt us to help you open up the brokerage accounts over at Interactive Brokers. Okay, let's continue here. And if you have any other questions, go ahead and type them over and we'll get to them and we'll pause and answer those questions as they come in. I just opened the solo 401k with Fidelity, but my CPA said that I need a TPA. So it's if you open up a solo 401k with Fidelity, then you need to reach out to Fidelity directly. Here at my solo 401k financial, however, we do offer self-directed solo 401k plans, and you can choose to use Fidelity Investments to hold the funds. Fidelity Investments will provide non-prototype brokerage accounts. You can even use Schwab. We'll draft those brokerage forms. But if you already have a solo 401k with Fidelity directly, which is more restrictive, for example, it doesn't allow for the mega backdoor Roth, then you need to contact Fidelity. But if you're switching over to our plan, certainly go ahead and go to our open account page and we can help you restate that plan over to our plan and you would fall under our ongoing compliance support, where we would help you file Form 5500 Easy, Form 1099R, and provide the ongoing compliance support, including being the plan document provider and thus prepare any plan updates as well. Here's a question. Do I need to close the Fidelity account I just opened? If you have not funded that solo 401k with Fidelity, then there's nothing to close because an account that has a zero balance doesn't need to be closed. So as long as you don't fund that plan, you can simply tell Fidelity you don't want to use their solo 401k services. And then you can come over to our company here at my solo 401k financial and open an account under our open account page. You'll fall under our plan documents, and we can help you to open up brokerage accounts at Fidelity for the solo 401k offered by my solo 401k financial that comes with all the bells and whistles, including the $1,500 auto contribution credit, which is a way of the government subsidizing solo 401k plans for the self-employed for years to come. It also allows for the mega backdoor Roth solo 401k strategy, participant loans, investment in alternative investments, and we'll help you, again, as I mentioned, handle the ongoing reporting for the plan. So here at my solo 401k financial, we've been in business since 2009. We were actually the first company in the industry to offer the mega backdoor Roth strategy. in the whole space, the whole solo 401k space back in 2013. And we've been processing thousands of mega backdoor Roth strategies over the last 10 plus years. We were also the first ones in the industry to provide a solo 401k plan with the auto contribution credit. And it's taken 2-3 years for others in the space to catch up to the regulations. So we're always at the forefront of the regulations. So when you use my solo 401k financial to be the plan document provider, that's not all you're doing. That's just the tip of the iceberg. We also perform live webinars every day. We have a robust website at 30,000 plus member community. We also provide the ongoing education, whether it's um, educating you on distribution rules, contribution rules, reporting rules, investment rules. The only thing we don't do here at my solo 401k financial is we don't sell investments, we don't provide investment advice, and we don't hold your money. So that's why we are a very popular solo 401k plan document provider, because you get to choose where to hold the money at. It's your money. Therefore, we don't put restrictions and say, well, you have to use this brokerage firm, this bank firm. Oftentimes, our competitors will restrict you in using their brokerage platform or their bank that they're affiliated with, and they're oftentimes getting some type of referral fee. Not here at my solo 401k financial. When we say grow, control, direct, which is our slogan, we truly mean grow, control, direct. But at the same time, here we're here to assist you with the ongoing compliance requirements. So, good question. Okay, let's see if we have some other questions here. Here's a question. Historically, our S Corp has contributed to SEP IRA from my spouse and I. Can we make a profit sharing contribution to the solo 401k that is treated the same way? Deductible for the business and not immediately taxable for the employee. Great question, and the answer is yes. It's an emphatic yes for that matter. Why? Because the solo 401k plan is one-stop shop. What does that mean? That means you can make both employee contributions as well as employer contributions. Whereas the SEP IRA only allows for employer contributions. That's probably why a SEP IRA is going the way of the dinosaur age. We have clients constantly transferring their SEP IRAs to the solo 401k plan, because again, with the solo 401k plan, not only can you make employer contributions, which is the only contribution type that a SEP IRA allows for, but you can also maximize your annual contributions by also making employee contributions. And on top of that, you can make normal catch-up solo 401k contributions, or even super catch-up contributions if you're age 60, 61, 62, or 63. What is more, the solo 401k plan allows for the mega backdoor Roth strategy. The SEP IRA does not. Also, the solo 401k comes with a $1,500 auto contribution credit. The SEP IRA does not. I'll stop there. I could probably spend 45 minutes just giving you all the pros and cons. We've actually performed several webinars comparing the solo 401k to the SEP IRA. Contributions to a solo 401k when you're self-employed, business taxes and S corporation are going to be based on your W-2 wages. Box one of the W-2 wages. You're going to be able to contribute 25% of box one gross wages as an employer profit sharing contribution. For example, let's say you pay yourself $100,000 of W-2 wages from that S corporation using tax year 2025 contribution amounts. You're going to be able to contribute 25% of 100,000 as an employer profit sharing contribution, equaling $25,000. You're also going to be able to contribute another $23,500 as an employee contribution. Lastly, let me share a link with you, which goes over where to report contributions on your tax return when your business is taxed as an S corporation or a C corporation, for that matter. Give me a moment here. Okay, take a look at that link right here. Let me get back to my slides here. Here's the link here that will provide guidance on how to report contributions on your taxes. You don't report contributions to us. The contributions are tracked inside the solo 401k holding accounts. And then you report the contributions on your personal and or business tax return. If it's an employer contribution, that's going to be reported on your Form 1120S. If your self-employed business is taxed as an S corporation. So here's an example of a one participant plan. Here is my solo 401k financial. We'll help you open up the holding accounts for the solo 401k plan. Pre-tax, Roth, and voluntary after-tax. You are required to have separate buckets, aka bank or brokerage accounts, to track each contribution source. If it's a two-participant plan, for example, both spouses that are working in the same business, the business sponsors the solo 401k plan. Both spouses are participants in the plan. They both don't have to participate. One can participate and the other one can sit on the bench. However, if you both participate, you're going to have a total of 6 separate holding accounts under the plan, because a 401k plan is a defined contribution plan. It's not a defined benefit plan. So because it's a defined contribution plan, you are required to separately track each participant's funds and source the funds. Of course, the solo 401k that we offer comes with all these contribution sources. You don't have to open up all these brokerage accounts at once. You can open 1 or 2, depending on what type of contribution or strategy you're trying to do. That doesn't mean you're going to lose the ability to make these contributions. We can help you to open up all these brokerage accounts at once or later on as well. Hopefully that answered your question there. Let's take a look at some other questions here. I think I answered this question just now. If my spouse and I are the sole W-2 employees of an S Corp, both want to make contributions to a solo 401k, do we just need a single plan and then set up separate accounts? That's exactly right. And that, I think I answered your question ahead of time. And here at my solo 401k financial, unlike many of our competitors, we only charge you one setup fee for both participants, because here we charge you at the plan level. And keep in mind that a solo 401k plan is sponsored by the business. So if you and your spouse are both working under the same S corporation, the S corporation sponsors the plan and you are participants. And that's similar to a traditional 401k. Let's say you work for NVIDIA. NVIDIA offers a 401k. All the employees of NVIDIA participate in the NVIDIA 401k. So they each have separate participant accounts, aka brokerage accounts, to hold their respective funds. Same concept with the solo 401k plan. Both spouses are self-employed in the same business. So one plan, but each spouse is a participant, therefore they have separate holding accounts. So some of our competitors will try to take you for a ride and they'll actually charge you double the fees. What they'll do is they'll try to set up 2 separate plans. Yes, I'm scratching my head on that as well, because that's out of compliance. So what they'll do is they'll say, well, we're going to charge you double fees. So even though you're both working under the same business, we're going to open up 2 separate plans. And that's going to create all kinds of compliance headaches for you down the road. But of course, they don't tell you that up front. All they care about now is charging you double the fees. Now, if you were both self-employed in separate businesses, then that would be 2 separate plans, because each plan would be sponsored by its own business. But if you're both working under the same S corporation, it's one plan. So the competitors will charge you double the fees, and then what will happen is, once the fair market value of the plan is greater than $250,000 in value, you need to file a Form 5500 Easy at the plan level. Well, now you've got 2 plans sponsored by the same business. The IRS is going to say, well, why do you have 2 separate 5500 Easies for the same business? You're probably going to say, well, I don't know, the compliance company, the 401k provider I opened this with told me I had to. So be mindful of that. Okay, let's see if we have some other questions here. Here's a question. I already funded my Roth IRA for 2025. Can I still open a solo 401k and do a backdoor Roth? You certainly can. Number one, Roth IRA contributions are never impacted by contributions you make to any 401k, whether a traditional Roth 401k or a Roth solo 401k or any type of contribution to a solo 401k, whether pre-tax, Roth, or voluntary after-tax contributions. Therefore, Roth IRA contributions are actually impacted by your earned income, what's called as your modified adjusted gross income. If your modified adjusted gross income is over a certain limit, then you can now make a Roth IRA contribution. But Roth IRA contributions, just like Roth solo 401k plans or any solo 401k for that matter, are never impacted by contributions to the Roth IRA or vice versa. Let me share a link with you where you can learn more about being able to contribute to a solo 401k in your IRA, whether a traditional IRA or a Roth IRA. Also, keep in mind that IRAs, you can perform a backdoor Roth IRA if your modified adjusted gross income is too high. And then there's the mega backdoor Roth solo 401k, which you can also perform inside a solo 401k plan. We have clients that will perform both the backdoor Roth IRA strategy, and then they'll also do the mega backdoor Roth solo 401k strategy. Talk about really supercharging your retirement account savings. Let me share the link here. About contributing to both a solo 401k and a Roth IRA. So take a look at this link right there. There's the link. Okay, let's get back to some more questions here. Give me a moment here while I look for some questions here. Here's a question. How long will it take to open the account with you? Same day. So that transitions to today's topic, which is too late for a solo 401k? Nope. Here's the deadline rule. So those who are trying to open a solo 401k plan for tax year 2025, it's not too late. You have plenty of time, as a matter of fact. We're going to be hard at work here through December 31st. So for the rest of the year here, helping individuals meet the deadline. And we've been at this again since 2009. So we've gone through plenty of December 31st deadlines. Excuse me. So let me get to my slides here. So you only have to perform 3 steps by December 31st. That's it, 3 steps. First, you complete our online application. That's how we collect the information to draft the solo 401k plan documents. A solo 401k plan is a retirement trust. So when filling out the online application, we're going to ask simple questions. Your name, your address, the business address, the name you want to use for the plan. When naming the plan, you want to use at least 3 words. So, and one of those words needs to have the word trust in the name. Don't use the word living. Don't use the word family. Don't use the word estate. Don't use the word financial, because a solo 401k is a retirement trust. It's not a financial trust. It's not a living trust. It's not a real estate trust. So don't use any of those words there. So let's say that your business name is Torrey Pines. You could call the plan Torrey Pines Trust. You can also use a fictitious name. You can use your favorite color. You could call it Blue Retirement Trust, Red Retirement Trust, Green Retirement Trust. Just needs to be 3 words ending with the word trust. Once you fill out that online application, the ball is on our court. We're going to draft the plan documents same day. We'll then email you a download link. As soon as you sign those documents, the plan is considered effective. So you've met the setup deadline. That means that you can wait till next year in 2026 to both open the solo 401k bank and or brokerage accounts and make the contributions. So yes, all you have to do is set up the plan, establish the plan by December 31st. So establishing the plan means you sign the solo 401k trust documents. That's how you establish the solo 401k plan. Because keep in mind, solo 401k plans, as I mentioned already, are retirement trusts. So it's the underlying legal documents that determines when the plan is effective. It's not when you make the contribution. It's not when you open up the bank or brokerage accounts. It's the actual signature establishment of the plan. And we'll provide those plan documents same day for your signature. And there we go. You've met the December 31st setup deadline, and you can wait till next year in 2026 to both open the solo 401k bank or brokerage accounts and make the contributions, whether employee contributions, employer contributions, or voluntary after-tax solo 401k contributions. So again, congratulations. Once you sign those documents, your plan is considered established. So what must be done by December 31st? You need to establish the plan by December 31st. And here at my solo 401k financial, we'll draft those plan documents the same day. You're going to be able to therefore lock in your contributions options. So you're going to be able to wait and make contributions next year in 2026 by your business tax return due date plus timely filed extension. And you're also going to be able to start the auto contribution $1,500 tax credit clock if you establish the plan here in 2025. And we'll talk more about that $1,500 auto contribution credit in a little bit. So again, you have until your business tax return due date in 2026 to open the bank account or brokerage accounts and make the contributions. You'll be able to make employee deferral contributions, employer profit sharing contributions, voluntary after-tax solo 401k contributions. And the reason the rules are more favorable for a solo 401k plan versus a traditional 401k plan is because self-employed individuals don't always know what their total self-employment income is going to be for the year. So therefore, you have more time to make those contributions. You have until the following year, in this case, 2026, to make the prior year meaning year 2025 solo 401k contributions. Also, a solo 401k does not employ what's referred to as common law employees. A solo 401k plan is for owner-only businesses. So a traditional 401k plan employs common law employees. So when I say traditional 401k, again, think about a full-time employer plan, such as one offered by Microsoft, Apple, Walmart, Best Buy. They've got non-owner W-2 employees. So those type of plans have more stringent contribution deadlines. And that was put in place by the Department of Labor and the IRS to protect those participants in that full-time employer plan to make sure that they do receive the contributions. Well, with the solo 401k plan, it's your business. You're the only owner employee in the business, or maybe your spouse as well. So you have more time to make those contributions. And you can learn more about this contribution deadline by looking at IRS publication number 560, which is the IRS publication for retirement plans, including solo 401k plans. There's a chart, I think on page 3 or page 2. It depends on where that chart falls each year when the IRS updates that publication. But there's a chart there that specifically talks about how a solo 401k plan is not subject to Title I of ERISA. And as a result, the employee and the employer contributions can be made the following year for the prior year. So all you need to do again, and I keep hitting this hard because I get this question constantly. I probably spend 10% of my day just saying the same thing. All you need to do is sign the plan documents. It's the signature of the plan documents that determine when your plan is established, effective. is not when you open up the bank or brokerage accounts or make the contributions. Hopefully that answers your question there. Let me go back here to my slides. Now, keep in mind that in order to open a solo 401k plan, you have to be self-employed in the business. You have to be performing material services. You have to be doing the actual work. It cannot be investment income. It cannot be capital gains income. It cannot be interest income. It's got to be income where you are actually performing the work, material services, and you report it as earned income. You also cannot employ any non-owner full-time W-2 employees known as common law employees who work 1,000 hours or more in any business that you control. So if you have multiple businesses, you may not be able to open a solo 401k plan for the business where it's just you. If you have another business that does employ full-time W-2 employees and you're also the owner of that business, it's typically there's a percentage test. There's the 50% test and there's the 80% test. You also can always exclude anyone who's under age 21 from participating in the plan, even if they're a W-2 and work 1,000 hours or more. We oftentimes get that question for individuals who employ their children in the business and they're working full time. As long as they're under age 21, they can be excluded from the plan, and therefore you would qualify for a solo 401k plan. Let's take a look at some more questions here. Here's a question here. When signing up for this plan, it asks if I will be rolling any 401k into it. I'm not sure yet, but I think so. If I say yes, what would that do to my enrollment? I'm assuming it will still be optional to add money in from another plan, and this just gives me that option. You're exactly right. So we asked that question in case you want us to help you transfer funds from an IRA or former employer plan when you open the plan. But no, you can choose to transfer IRAs or former employer plan funds to the solo 401k next year or in later years, and we'll assist you at that time in drafting those transfer forms to ensure that those funds are transferred over to the plan as a non-taxable direct rollover or trusted to trustee transfer. So no, even if you answer no to that question, that doesn't mean that you're not going to be able to do so later. Also, what is more, keep in mind that when you transfer IRAs or former employer plans to the solo 401k plan, those transfers do not affect your annual contribution limits. So whether you transfer $1 million, $50,000, $75,000, $50, that's not going to impact your annual contribution limit to the solo 401k plan, because the solo 401k contribution limits are different. They're not impacted by any income and transfers or direct rollovers from IRAs or former employer plans. Let's take a look at some other questions here. What is the advantage of rolling an old 401k into this plan? I had one at Fidelity from my previous employer. I never rolled it anywhere. Just wondering what the advantage to roll into the solo 401k versus a traditional IRA. So I wouldn't call it an advantage, but I see a lot of clients using the solo 401k plan to consolidate their retirement accounts under one roof. So they may want to transfer a number of IRAs or a former employer plan over to the solo 401k so all the funds are under one account. Another reason I oftentimes see that is a lot of our clients like to invest in rental properties. So when you invest a solo 401k in a rental property, the solo 401k owns the property. And obviously, solo 401k funds need to be used for the purchase of that rental property. So if they need to have enough funds in that solo 401k plan to invest in that rental property, that's another reason why they'll consolidate IRAs or former employer plans into the solo 401k plan. Another reason is a lot of our clients like to process solo 401k participant loans where they borrow 50% of their solo 401k balance not to exceed $50,000. So those are the main reasons. Whether it's an advantage or not, I wouldn't call it an advantage because at the end of the day, they're all retirement accounts, meaning that they are all offered tax shelter status, favorable tax shelter status, typically until distributions commence. Let's see here. Here's a question here. I just started to open an account with you. The process to fill out the paperwork, is there a sign in to my solo 401k account? No, there's no sign in. Why? Because keep in mind, we don't hold your money. Your sign in is going to be at the brokerage firm or the bank. We're going to help you to open up the holding accounts for the solo 401k plan. Remember, we don't hold on to our clients' money. That's why we open so many solo 401k plans, because we let you choose where to hold the funds, that it's your money. We don't need access to your funds to help you with the ongoing compliance reporting. We'll collect the necessary information from you directly to do the ongoing compliance reporting. So no, there's no login because we're not holding on to your funds. Okay, let's see here. Here's a question. I just opened my solo 401k account with you. Are there preferred banks you recommend for the retirement trust account? Not necessarily. And number one, you can use a major bank. Many of our clients have used major banks from Wells Fargo, Bank of America, Chase Bank. They actually don't open up bank accounts anymore for solo 401k plans. They probably see it as competing against their solo 401k plan. Chase offers their own solo 401k indirectly through some other company. But you can also use your local credit union and regional bank. We also have a banking guide that we'll share with you. We can also speak to your local banker to educate him or her on how to open up the bank account. The bank account for the solo 401k plan is going to be opened up in the name of the solo 401k using the solo 401k EIN number. So again, we'll gladly set up a time to speak with your banker if he or she has any questions, but thousands of our clients have used their local bank, whether a regional bank, a big bank, a credit union. Also, if you want to use Fidelity Investments or Schwab, we can help you to use Schwab or Fidelity. You're still going to be able to invest in equities as well as real estate, promissory notes, and other alternative investments because the plan is through us. Okay, let's see here. Here's a question. I plan to open account at Interactive Brokers for the brokerage accounts. Yes, many of our clients have used Interactive Brokers to open up the brokerage accounts for the solo 401k that we offer, and we'll help you to open them at Interactive Brokers, and that can be done online. We have a PowerPoint walkthrough on how to fill out the Interactive Brokers, what they refer to as trust account application. So that's part of our setup process. Do I need to check whether my W-2 employer retirement account support Mega Backdoor? You can if you have a traditional 401k with your daytime employer and you're trying to make contributions to that 401k. Obviously, that's not a 401k offer by my solo 401k financial, as we offer solo 401k plans to come with the Mega Backdoor Roth strategy. We don't offer big company 401k plans. What is the due date for funding the solo 401k for year 2025? It's going to be based on your business tax, how your business is taxed. Let me share a page from our website. Give me a moment here, and I'll shed some more light on that as well. So take a look at this. Take a look at that link there to that page, which talks about what about the contribution deadlines, which again are driven by how your self-employed business is taxed. For example, if your business is taxed as an S corporation, you have until March 15 of 2026 to make year 2025 contributions, whether employee, employer, or voluntary after tax. If you file an S corporation business tax return extension, you're going to have until September 15 of 2026 to make year 2025 solo 401k contributions. So you're going to have plenty of time to make contributions for tax year 2025. You're going to have all the way up until your business tax return due date plus time we filed extension in 2026 to make year 2025 contributions. If your business is taxed as a sole proprietorship, for example, then you have until April 15 of 2026 to make your 2025 contributions. If you file a Form 1040 extension for your sole proprietorship, you're going to have until October 15 of 2026 to make all contribution types to the solo 401k plan for tax year 2025. That's employee contributions, employer profit sharing contributions, as well as voluntary after tax solo 401k contributions. Good question. Here's a question here. I have a solo 401k plan with you. It was ABC LLC was single owner. Now I'm paid from CB LLC that I am the sole owner. Do I need another solo 401k or can two LLC pay into the same solo 401k plan? So we would need to update your plan to list the new self-employed business. So the plan name is going to stay the same. The EIN number for the plan is going to stay the same. The holding accounts are going to stay the same. We just need to update the plan to list the new self-employed business. You can submit a support ticket on our website so to prompt us to process that update for your plan to list the new self-employed business. Let me share that with you here. So take a look at that link I just shared there. That's where you would submit a support ticket so that we collect the necessary information to update your plan to list the updated self-employed business. How do I book a phone call? We have a scheduler on our website where you can book a call. Let me share that link with you here. Keep in mind that December is the busiest month of the year, not only for us, but the entire industry. So we might be booked quite a bit into December. So take a look at that. Here's where you would book a call. All the calls with my solo 401k financial are scheduled so that we can make sure you speak to the applicable individual and professional to answer your particular questions. You can also submit support tickets. You can also email us. You can also join the daily webinars for your questions. But there's the link where you can book a call. I'm looking at the application paperwork. The EIN for the company is not there. How do I update that? You don't need to provide us with the EIN number for the business. We don't list the EIN number for the business in the plan documents. That's going to cause confusion with the bank or the brokerage firm when you go to open up the brokerage accounts. So do not provide the EIN for your business. When we go to help you open up the bank or the brokerage accounts for the solo 401k, they're going to have to be opened up under the plan using the plan's EIN number. Keep in mind, a solo 401k plan is a retirement trust. It's going to have its own separate EIN number. You do not use your business EIN, nor do you use your social. That's another question I get all the time, and I probably spend 5% of my day answering that question as well. And even though I answer it, individuals will still try to open up the bank or brokerage account using their business EIN and then have to come back and clean it up. So please do not use the EIN number for your business. We will obtain an EIN number for the solo 401k. A solo 401k is a retirement trust. It's not a business. So when naming the solo 401k, don't put the business as part of the plan name either. Okay, let's see if we have some more questions here. If the sponsoring S Corp contributes profit share into the pre-tax account, does that contribution reduce the total contribution amount allowed for all sources? Yes, it does. Keep in mind that a solo 401k plan allows for employer profit sharing contributions, employee contributions, as well as voluntary after-tax contributions. And all those amounts make up the overall limit, which the overall limit for tax year 2025 is $70,000. Let's get to that slide here. So here are the tax year 2025 contribution limits. So if you make an employer profit sharing contribution of $25,000, that's going to reduce reduce the overall contribution limit of $70,000. So when you go to make the employee contribution, you're also going to be able to contribute $23,500. If you want to make the difference as a voluntary after-tax solo 401k contribution, you can up to the overall limit of $70,000. But when added together, you can now go over that $70,000 overall limit for the year for someone who's under age 50. If you're age 50 or older, you can do an additional catch-up contribution of $7,500. For those who are age 60, 61, 62, or 63 in 2025, they can make a super catch-up contribution of $11,250 instead of $7,500. Of course, in order to make these additional catch-up contributions, you're going to need enough net self-employment income to justify those contributions. You cannot contribute more than you make. So if you only make, let's say, $25,000 of W-2 wages from your self-employed S corporation business, you're not going to be able to contribute more than $25,000, whether employee, employer contributions, voluntary after-tax solo 401k contributions, or a combination of all three. We've actually performed webinars on this topic. Visit our YouTube channel, subscribe to our channel, and you're going to be able to access all those prior webinars we've done on contribution rules for an S corporation, sole proprietorship, partnership. Let me also share a link from our website where we have a specific page that covers the contribution rules for an S Corp or C Corp. Give me a moment here. There's also a video on there, a video tutorial that you can review. So we have plenty of resources. We've been in business for a long time, so we've been able to accumulate a lot of good knowledge that we've posted on our website there for the whole world to see. Take a look at that right there. Also, if this information is helping you feel confident about your future, please take one moment to like and subscribe. That's all it takes. It lets other solopreneurs know that this information is helpful and it helps them to find it later on. Subscribing also guarantees that you receive information and notices of all our crucial content that we deliver every day. We have a My Community, where we have over 32,000 members. It's free to join. You can post forums there. There's all kinds of blog posts that have been published by guest blog posts, published by financial advisors, attorneys, CPAs, real estate brokers, agents. You can post guest blog posts, flex your knowledge. The 32,000 plus eyeballs can then visit your website to see if any of your services will be helpful, and they'll reach out to you directly. Again, it's free to join. It's mysolo401k.net/my community/. So take a look at that. See if we have some more questions here. I want to do a backdoor Roth conversion. Do you offer such a plan? I currently have a solo 401k, but I want to convert to pre-tax to post-tax now. Yes, we do. As you may have joined the webinar late. We're the first solo 401k provider in the industry that offer the mega backdoor Roth going back to 2013, and we've been processing them ever since. So yes, We do offer the Mega Backdoor Roth Solo 401k strategy through our Solo 401k plan. Here's a good slide here that talks about the Mega Backdoor Roth. So we would, if you have an existing plan already with someone else, we can restate that plan to our plan that allows for the Mega Backdoor Roth strategy. We'll then help you to open up the holding accounts, aka bank or brokerage accounts for the Solo 401k plan. Here's an example of a Solo 401k plan sponsored by one participant business. Let's say you're self-employed in an S corporation. The S corporation would sponsor the plan. We would help you to open up these 3 brokerage accounts: a pre-tax, a Roth, and a voluntary after-tax. The voluntary after-tax contribution would flow into the voluntary after-tax holding account, and then it would get converted to the Roth Solo 401k, or even to a Roth IRA if you prefer. So once you make that contribution to the voluntary after-tax Solo 401k, you're then going to convert it to the Roth Solo 401k. You're then going to fill out our online conversion form under the Forms tab of our website. On the top right-hand corner, click on Forms. That'll take you to our Forms page. There is a conversion form that you would fill out to prompt us to report that Mega Backdoor Roth conversion to the IRS on Form 1099-R. And the issuance of that Form 1099-R is covered in our annual fee. We don't charge extra for that service. So yes, we certainly offer the Mega Backdoor Roth strategy. Good question. Here's another question. If you are the sole owner of an S corp, but also receive 1099 income as a sole proprietor, does the W-2 income plus the 1099 income count toward the max allowable contribution for the Solo 401k and Roth? Yes, it does. Let me share a link from our website that talks about how contributions to a Solo 401k plan are required to be based on your aggregate self-employment income from all of your self-employment activity. Give me a moment here and I'll share that link with you. So yes, you would add the income from both, your earned income from both businesses. You would use that income to calculate your maximum Solo 401k contribution to the plan for the year. Take a look at this link right here. There's the link there. Aggregate from multiple sources of self-employment income for making self-directed Solo 401k contributions. So again, the max, you can now go over the maximum overall 415C annual contribution limit when making contributions to a Solo 401k plan. We talked about how for 2025, the maximum overall contribution limit to the Solo 401k plan, whether you're making employee contributions, employer contributions, or voluntary after-tax Solo 401k contributions, cannot be over $70,000 for someone who's under age 50. For year 2026, the overall contribution limit increased to $72,000. So it went up by $2,000. So for the year 2026, the maximum you can contribute to a Solo 401k plan, whether employee contributions, employer contributions, or voluntary after-tax Solo 401k contributions, or a combination of the 3, for someone who's under age 50 is going to be $72,000. Let's see here. I use Lena Realty Trust. Will that be okay? Just place the order online. Yes, that's fine, because you didn't use the word real estate. You used the word realty. So yes, that's a good name for a Solo 401k plan, because a Solo 401k plan is a trust. You just don't want to use the words living trust estate trust, family trust, investment trust, financial trust, because a solo 401k is none of those. It's not a land trust, it's a retirement trust. So when you hear someone say trust or retirement trust in the context of a solo 401k, that's another way of saying solo 401k. A retirement trust is another way of saying solo 401k because it's a way for the government to say that it's offered favorable tax treatment, specifically tax deferred status under the IRS code. Here's another question here. I named the solo 401k plan the same thing as the business, just included the word fund. Will that be a problem? No, that will not be a problem because fund is not a living, there's no such thing as a fund trust. So that's not going to cause any confusion. So that plan name is fine as well. Good questions. Here's a question here. I have a full-time W-2 job and a side 1099 income job, which I want to open a solo 401k. Do I need to check the W-2 401k account? I match the account to see whether they allow for the mega backdoor Roth. So if you contribute to your daytime job 401k, no problem. Because you can also open a solo 401k plan for your side business. We have a lot of clients who are high net worth clients where they'll work for a full-time employer. Oftentimes they're a doctor or an attorney, some type of professional, and they'll max out the contributions to that daytime job 401k up to the overall limit of $70,000, for example, for tax year 2025. And then for their side business, they'll open up a solo 401k plan and they'll go ahead and make $70,000 in voluntary after-tax solo 401k contributions to the solo 401k plan and convert that to the Roth solo 401k plan. And of course, they had enough self-employment income to justify that contribution. So in short, voluntary after-tax solo 401k contributions to the solo 401k plan are not impacted by any contribution that you make to your daytime employer 401k. So even if you've maxed out your daytime employer 401k up to $70,000, you can still max out your solo 401k plan up to $70,000 in voluntary after-tax solo 401k contributions as well and convert those to the Roth solo 401k, resulting in $140,000 in contributions for the year between both plans. I mean, talk about really supercharging your retirement savings. I mean, it makes me salivate. Imagine being able to do that every year. You're really going to supercharge those Roth solo 401k funds. So yes, you can definitely utilize the mega backdoor Roth strategy, even if you already maxed out your daytime job contributions. Also, keep in mind that the only type of contribution that's aggregated between your daytime job 401k and your solo 401k are employee contributions. That 23,500 for tax year 2025. Those aggregation rules do not apply to voluntary after-tax solo 401k contributions or employer profit sharing contributions. So you could choose to make some employer profit sharing contributions to the solo 401k plan. And then the difference up to $70,000 as voluntary after-tax solo 401k contributions and convert those to the Roth solo 401k. Or you can just solely make voluntary after-tax solo 401k contributions to the solo 401k plan and forego making employer profit sharing contributions to the solo 401k plan. So certainly. Okay, let's see what we have going on here. Yes, the maximum solo 401k contribution for tax year 2025 is $70,000. For tax year 2026, it's going to be $72,000. I read something that needed to be added up. I don't know what you read, but I can tell you that when making voluntary after-tax solo 401k contributions, they're not aggregated. Maybe you read something about employee contributions. All right. So let's take a look at some more slides here. We've been spending most of our time answering Q&A questions here. Let's talk about the auto contribution credit. So with the auto contribution credit, you have to open a solo 401k plan from a solo 401k provider who has the auto contribution credit built into their solo 401k plan. As I said earlier, we were the first in the whole industry to offer a solo 401k plan that has the auto contribution credit. Now everybody else is piling on. So finally, kudos to all those companies. So for the auto contribution credit first became available on January 1st of 2024 and after. So any plan that we've drafted from January 1st, 2024 and after already has the auto contribution credit built into it. If you're a client of my solo 401k financial from December 31st of 2023 and prior, we can add the auto contribution credit to your plan and you can start taking advantage of it. Let me provide a support ticket. It's a link to our support ticket where you can submit a support ticket and we can add that auto contribution credit to your plan. So the auto contribution credit is a dollar for dollar credit. It's a total of $1,500. You claim it in $500 increments over a 3-year period. So for those that open a solo 401k plan here in 2025, you can start taking advantage of that auto contribution credit in tax year 2025. And then once we add that auto contribution credit to your plan, and again, it's drafted, we draft the plan documents for those who open a plan now with the auto contribution credit built into it already. It's a dollar for dollar credit, meaning it reduces your business taxable income on a dollar for dollar basis. So it's better than an expense from a business tax reduction perspective. And what's great about the auto contribution credit is that once we add that contribution credit to your plan, which has all the applicable language within the plan documents, there are forms you sign as well. You can opt out of having to contribute to the plan, and you're still going to be able to contribute to the plan, and you're still going to be able to claim that credit. So, best of all worlds, you're not required to contribute to the plan in order to qualify and claim that auto contribution credit. And you'll still be able to contribute up to the overall limit, or you don't have to contribute at all if you don't want to. You're going to claim that credit each year for 3 years in $500 increments. So for 2025 tax year, so when you file your tax return next year in 2026 for tax year 2025, you're going to file Form 8881 for that first $500. Then you'll file another one for 2026 the following year, and then for 2027 the following year for a total of $1,500. So you file that Form 8881 a total of 3 times. We have a video walkthrough and a PowerPoint walkthrough on how to fill out that form. We even have a forum post on my community for those that file their taxes, business and or personal taxes using TurboTax. Again, we have join our community where we have over 32,000 members. You can access forums, post forums. There's a forum there that with several posts regarding claiming the auto contribution credit if you file your taxes using TurboTax, for example. Now, don't confuse the auto contribution credit with the tax credit. I find that a lot of tax professionals confuse the two, and I can understand why, because they don't work with solo 401ks on a daily basis. So let me provide a link with you to an article that we wrote on the difference between the auto contribution credit and the tax credit. The solo 401k plan falls under the auto contribution credit, that $1,500 credit, not the tax credit. So share this link here I'm about to share with you with your CPA, tax professional. There's the link there to that great article. So take a look at that so you understand the difference between the auto contribution credit and the tax credit. The solo 401k plans qualifies for the auto contribution credit. So there's the link to that great article that we put together. I think it was a couple years ago now. Okay. See if we have some more questions here. Here's a good question. Catch-up contributions in 2026 must go to the Roth 401k if you have one, correct? No, actually. Or I should say it depends. I actually did a webinar on this topic a couple weeks ago. So if you subscribe to our YouTube channel, you can access that webinar. Let me pull up the link on that and I'm going to shed light on that. But that's a great question. And I'm going to tell you why yes and no. How's that for an answer? And I'm going to share this page here with you as well so you have it at your fingertips. Give me a moment while I pull it up here. So here's a link to the page and to the video that I did a webinar on in this topic. So take a look at that page right there. But in short, the mandatory Roth 401k catch-up contributions that's effective starting January 1st of 2026 only applies to certain self-employed business types. It only applies to businesses that are taxed as an S corporation or a C corporation. It does not apply to businesses that are taxed as a sole proprietorship or a partnership. So again, take a look at that link to that page I just provided there, where I did a webinar on this topic, and I also put on a blog post right there that breaks it down. And you also need to look at the again, you need to distinguish what type of employed business you have. So take a look at that there. But it would apply to both super catch-up and normal catch-up contributions if your self-employed business is an S corp or a C corporation, but it does not apply if your business is a sole proprietorship or a partnership, or if your earned income, or I should say, if your W-2 wages, box 3 of your W-2, if those wages are not greater than $150,000 for 2025, then it also would not apply to your S corp or C corp self-employed business. So again, take a look at that link right there to that page in the video, because we did a really good job of breaking that down. Let's see here. Let me go back to this question here. Other than your published flat fees, are there likely to be any other costs associated with setting up and maintaining a solo 401k plan? No. So keep in mind that our fees, which in the first year, the first 12 months, we charge a total of $650. That will cover you from December of this year through December of next year if you sign up for the plan now. Next December, we would invoice you a flat fee of $125 for the following 12 months. What's all covered in our annual fee? The annual fee is for being the solo 401k plan document provider. So it's going to cover IRS plan updates. Because keep in mind, when you first set up a solo 401k plan, it's not just a one-shot deal. That plan has to be kept up to date with the regulations. And then and on that annual fee of $125, again, it's for being the plan document provider, but we also include all these other services here at no additional cost. So we'll prepare and file Form 1099-R if you process a distribution or a conversion, for example, or if you transfer funds out of the plan to an IRA or to a full-time employer plan, as long as you qualify. you meet a triggering event, you can do those types of transactions. That would result in having to issue a Form 1099-R. That's covered at no additional cost as long as you timely request that service. So you need to make sure you let us know when you perform these functions, these activities, so that we can help you perform this reporting. Because again, we don't have access to your funds. We don't need access to your funds to perform this reporting. Instead, you would go to the Forms tab of our website. On the top right-hand corner, there's a Forms tab to our Forms page. That's where you'll find these forms. We'll also prepare and file Form 5500 Easy at no additional cost. That Form 5500 Easy applies once the market value of your solo 401k plan is greater than $250,000 in value as of the end of the plan year. For example, if the end of the plan year is December 31st, so if as of December 31st of 2025, the value of your solo 401k plan is greater than 250,000 in market value, a Form 5500 Easy will need to be filed with the government by July 31st of 2026. If you go to our Forms tab, there's a link where you can fill out a form to request the preparation of that Form 1099, of that Form 5500 Easy, just like there is a link to a page for preparing Form 1099-R. And again, as long as you timely request this Form 5500 Easy preparation, that's going to be covered in our fees. But you need to make sure you let us know because we don't have access to your funds. Of course, if you're opening the solo 401k plan for the first time, we'll help you set up the plan. Not only do we draft all the plan documents, but we help you to open up the holding accounts for the plan, whether bank accounts or brokerage accounts. We'll also help you to calculate contributions to the plan. If you want to transfer IRAs, former employer plans to the solo 401k, we'll draft those forms. So we take care of all that. We also educate our clients on contribution rules, distribution rules, investment regulations, whether investing in real estate, cryptocurrency, and so forth. We'll also include a $1,500 auto contribution in our plan. We'll prepare solo 401k participant loan documents. On our Forms tab, there's a link where you can request solo 401k participant loan documents prepared. In short, as I already mentioned a few times, the only thing we don't do here at my solo 401k financial is sell you investments. We don't provide investment advice. That's probably why we have a lot of institutional clients. A lot of the advisors use our solo 401k services for their clients. They'll use Altruist to hold their funds for their clients, or even Fidelity or Schwab on the institutional side, or any broker dealer that they clear through, because they know that they don't have to worry about us trying to steal their clients. Because again, we're not selling. We don't even have access to our clients' funds. We don't sell them investments. We don't provide investment advice. What are we experts at? We're experts at being solo 401k plan document providers and providing compliance support. So we stay in our lane. That's why we're so well respected in the industry. And we've been in business since 2009, and we have thousands of clients. And we also educate clients on a daily basis on the rules and regulations, kind of like I've been on here for over an hour now, going over all your questions, talking about the rules and regulations. Let's see here. On your website, where can I calculate the maximum amount of after-tax contribution I can make in 2025? The calculator on your website does not show the word voluntary. That's standard in the industry. You're not going to find any calculator out there that says voluntary anywhere, because the voluntary after-tax solo 401k contribution falls under the employee side. So essentially, that's why we perform calculations for our clients, number one. We also have contribution guides on our website. But for example, let's say you're trying to calculate your voluntary after-tax solo 401k contribution for your self-employed S corporation. That's going to be a very easy calculator or calculation. So for example, if you pay yourself $70,000 of W-2 wages, so box one, the gross wages from your self-employed S corporation for tax year 2025, you're going to be able to contribute $70,000 to the voluntary after-tax solo 401k, because the voluntary after-tax solo 401k contribution, it's a dollar for dollar calculation. It's not a percentage calculation. So all you need to pay yourself to to contribute the overall voluntary after-tax solo 401k contribution limit for tax year 2025 is $70,000. You pay yourself $70,000 or more, that won't matter because you cannot contribute more than $70,000 to the voluntary after-tax solo 401k bucket. I need to amend my plan to start making spouse contributions. I'm shutting down my solo and going to work for him and contributing to his plan. I have to start. So if you're a client of my solo 401k financial, go ahead and submit a support ticket and we can update your plan or his plan. If he or she has a plan with this, I really can't tell by reading your message here, and we can update the plan to add the spouse to the plan. So your scenario, I don't quite follow your scenario completely, which is understandable, but go ahead and submit a support ticket and we'll go ahead and take a look at that more closely if you are a client of ours. I actually provided the link to that support ticket earlier. Let me see if I can dig it up over here. Okay, here's our support ticket. Submit a support ticket there outlining what you're trying to do, and we'll go ahead and amend the plan to add you on there. Ah, Clyde, so you each have a plan. I understand now. You must have, okay, you both have separate self-employed businesses then. Go ahead and submit a support ticket, and we'll do that. But let me look at your questions some more here. Okay, so that means that the solo 401k plan for the spouse that no longer will be self-employed in that particular business, that plan will need to be transferred over to the other spouse's solo 401k plan once you've been added to that plan, assuming you're also working in that same self-employed business. And then we would help you to open up new holding accounts under that plan and to move the existing funds in the other plan to this new plan. So yeah, you definitely need to submit a support ticket for that so we can dissect that completely. And keep in mind, this is the busiest time of the year for us. So if you submit a support ticket, it typically takes 3 to 5 days for us to get back to you. So thanks for your patience. Okay, so that's it for today's solo 401k session. We've been on for about an hour and 15 minutes. Thank you so much for investing your time with this. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe to our YouTube channel so that we can keep building this community. Until next time, have a great rest of the day.